You've always suspected it. Fortunes are made while others are distracted. And what a couple of years for distraction we have had. Now, there are some specific lessons that we can learn from this COVID bungle in the markets. And I'm here with Chris Tate, my business partner of many, many years, more than 2 decades. We're going to look at some of those patterns in the charts. We're going to discuss some of the lessons that we have learned and that our traders have learned over the past couple of years. You see, if we can't think about the past and learn from the past, we can't take those lessons into the future. So let's really dissect this now. So Chris, I'm so glad that you could join me. Let's have a look at some of the patterns that you've seen in the markets and some of the aspects that you've been able to detect from the charts.
One of the interesting things about things like COVID is that people presume that these events occur in isolation. That all of a sudden you're bumbling along one day, your portfolio is doing perfectly fine, and then the next day it's halved. And there's no warning whatsoever. It's a little bit like being hit by an asteroid or something. That's not the way it works. The good thing about markets is they will tell you everything you need to know, and they've always told you everything you needed to know. The great problem is most people don't listen. And by not listening, I mean they don't look back at what has occurred in the past. So most people think that the only things that happen in the market are those things that have happened whilst they're there, not before they got there. So if you look at this slide we've got here of the ASX 200, you see something really, really interesting. You see 4 savage down periods, then a reversal. So the market's actually telling you something. The market's actually telling you a story, and it's telling you a story both as it's heading down, but also at the bottom. Because along the bottom of the chart, you'll see that we've got volume plotted, and you see volume build, accelerate, then drop off. Market then recovers. If we look at the next slide, this is slightly more complex and needs a bit of explanation, in that it simply looks at the percentage of stocks in the ASX 200 which are below their 200 period moving average. So it's an indication of how bearish markets might be. When you look at this, the upper range doesn't tell you much, doesn't tell you a lot, but the lower range tells you a great deal. And if you look back in time, there's a red bar along the bottom of the chart, and the red bar carries across from the GFC. So you get a sense that what we saw during COVID is what we saw during the GFC. Markets get to a point where it's difficult for them really to be any more bearish, and then they reverse. And one of the things that people forget about markets is markets are not based upon what's happening today. That's nonsense. So when you hear these nonsense little news items that says that the market went down today on profit taking, nonsense, it did. It just went down because the price range occurred within its natural variation of volatility. Markets look forward. So people are confused. When they see markets fall, like during COVID, then stop and reverse, they go, can't understand how that is. The pandemic's still going. No, what the market's done has discounted that and gone, yes, we know the pandemic's still going, but we're not thinking about tomorrow. We're thinking about next year, 18 months. And markets operate on a presumption of, and this too shall end. And so markets were based upon that. And if you weren't attuned to that, you'll still be sitting on the sidelines going, I'm just waiting for a little bit more confirmation.
I think it's also quite clear that markets drop due to fear, and they drop fast. That can just totally be eradicated in terms of confidence in a system so quickly, and confidence can take a while to re-establish.
But I think there's a distinct reason for that. Fear is a natural primed response. Greed is culturally acquired. So people are very, very easy to scare. Anybody who's had someone walk up behind them not knowing that they're there will know the sensation of how easy it is to be frigging terrified. Greed is something we acquire from the culture around us, so it takes time to build. Fear is of survival value. greed has no survival value at all, so it's not selected for.
Yeah. And in terms of exceptional traders over the past couple of years, give me an idea about the type of risks that they were facing and how exceptional traders mitigated the risks, because I think this is something that has really become apparent in the market. Everybody has become a bit skittish, but then there's been an incredible recovery. Tell me more about the risks.
Everybody faces the same risk in trading. There are no unique risks for people. Now let me rephrase that. Some people might face a slightly more unique risk in that they're not self-aware, they're not aware of what's occurring, they operate pretty much blindly. But if we were to look at the economic risks are all the same. Everybody faces the same risk. Risk mitigation occurs through a very, very, very simple tool. It's called a system, and by extension a systematic approach to investing. The unfortunate thing about investing / trading is that the popular media and people's preconception of it is that it's something that people make up as they go along, and that's not true. It's a flight plan. If we look at this slide of Kogan was one of the stocks that recovered first and most powerfully during the early part of the pandemic. Systems can be very, very simple. This has a very, very simple system applied, and it's called a straight line. And the only thing you need to do is, once price in an uptrend pierces that straight line, known as resistance, you buy it. But then the hard part starts. Then the management of the trade becomes the issue. And if we look at Temple and Webster, you see the same pattern, and that's to be expected because these stocks are online retailers. Online retailers did very, very well during the early part of the pandemic. It's the trade management. It's what do you do when you've bought a stock at 3 and it's now 9? Well, what most people's presumptive action is that the stock they bought at 3 is now at 4, they sell it. What a very good trader does is it's now at 3, it was at 3, now at 6, you buy more. It's now at 9, you buy more. It's now at 12, you buy more. And eventually you run into trades like Kogan where you get 300% and 400% gains. But it only occurs because you are systematic in managing the trade and the risks along with the trade.
And that's really the sign of the professional trader, I think. So what about leading into the future? What sort of results can we expect from now onward?
That's a very powerful and a very, very hard question. I would say that for the ill-educated and the ill-informed, my expectation for you would be 0. But worse than that, probably less than 0. Because markets are a wealth redistribution entity. They move money from the controlled and the well-prepared to the irrational and the somewhat childish. And so for those sorts of people, those who are not prepared, my expectations are not high. Systematic investors will always find a way or a market that enables them to be profitable in some way, shape or form.
You know, the other thing I think that pretty much all traders can expect is that very few of the trades that they actually take are going to be these massive upswings. It's often in our own lives, we find that there's only very few trades per year that make a heck of a lot of money, and that's okay because your win-loss ratio is not something that's of concern. It's how big your wins are and keeping those losses small.
But that's very hard to convince people of.
It is.
And it's hard to convince people because we're used to being rewarded on being right, on turnover, on hours worked. So it's very, very difficult for people to understand that your equity curve might look like a little loss, sort of a little win, little loss, little win, really, 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 really big win. And it's very, very difficult to convince people that that's actually the nature of trading. That the market doesn't give you a check every 2 weeks, despite what people say.
Yeah, it'd be nice if it did. So do you think that system traders came out on top during COVID, or were they some of the ones that waited for too much confirmation before they got involved again?
It depends upon the interaction with the system. I probably should. There's differentiation in trading. There are systems traders. System traders have a flight plan, and the flight plan articulates everything that they will do from beginning to end. And then there's everybody else. And you can actually see the impact of everybody else. What I'm looking at now are analyst estimates for CBA. And it tracks the price of CBA, and it tracks high and low expectations of analysts. And the bar along the bottom of the chart looks at how far above or below CBA's actual price they were. They never get it right. And they never get it right because they're attempting to tell the market what they think CBA should be worth. And CBA is probably our most covered company, as you would expect. It's enormous. So you would expect that there would be a depth of knowledge and experience that would say, look, I can precisely tell you based upon earnings and the state of the economy what CBA will be. Not a hope. Systematic traders go, don't care. I don't care what my perception of the economy is, what my perception of CBA as a company is. I don't care about the board of directors. Don't care whether the managing director is a complete and utter incompetent fool. All I care about is what does the system tell me. And with stocks like CBA, what the system would have told you is, we've had the COVID dip, you've now got a buy signal, and lo and behold, the stock almost doubles from there, which is quite an extraordinary feat for a stock the size of CBA.
It is. And I think during times of pressure, people do flee to things that they are comfortable with and that they know. But it's really that having the system is really the core, isn't it?
It's the only thing that matters. Everything else is simply just making it up as you go along.
And what are the dangers of not educating yourself in the markets?
Look, let me answer that with reference to an example. Anyone who knows me knows that I'm a fan of German cars, particularly small ones that go very, very fast. In Germany, it is illegal to teach a member of your family to drive, and homeschooling is banned. Why is that? Because the Germans, being very, very sensible, realise that the last person you want to teach you to drive are your parents, because they're probably hopeless. And the last person you want to be teaching you calculus is probably your parents, because they probably don't know how to do it. Unfortunately, people look to the wrong people to educate them. And the bloke down the pub can't help you. The young bloke on Twitter who claims to be making 8,000% a day can't help you, because that's simply made up. The issue with education is a little bit of a difficult one, simply because of the amount of noise. But I suppose the benchmark you would use, and it's really quite a simple one, is one of longevity. Have you heard about this person before the week before? And if you haven't, well then, there's probably a reason for that.
Yeah, I think we see a lot of junior traders get quite attracted to that latest, greatest system, that shiny object. But in actual fact, the things that we do in the markets are very similar time and time again and throughout the years. That's really where our longevity comes from. It's doing the basics, the core, very, very well. Now, in terms of the mistakes that you've seen traders make, what would be some of the common mistakes people have made over the last couple of years?
Do we have a weekend? Look, trading, unfortunately, is full of these silly little homilies, like buy low, sell high, let your profits run, cut your losses, all things like that. They all have a degree of truth to them. But the unfortunate thing is they don't address the central issue in trading. And the central issue in trading is the trader. How are you going to interact with your system and the market? Yes, you can get a system off somebody else. And they say, here, simply do this and money will just appear. Well, for a start, that's a nonsense notion. But more importantly, it's not actually your system. So it's not idiosyncratic. It doesn't conform to you. It's a little bit like me saying to anyone, look, You can have a pair of shoes, provided they're size 13D, which is my size. And if you're not comfortable with that, that's the problem. One of the largest mistakes I see as a cornerstone of trader failure is traders simply don't put in the time to build their system. And they don't build it around the things that suit them, how they see the market, what their life restrictions are, what their experience is. They seem to be drawn, as you say, to these bright, shiny objects, a little bit like a cat with a laser pointer, because they think that's magic and they've been told that's magic. One of the great problems with trading is that it does take time to build a system. It does take time to get used to your interaction with the system and the market. But the payoff from that is simply that at the end of the day, you have something that is robust and can be applied to any market over any time frame.
Which is the core of what we're looking to help our traders establish as well. Every instrument over every time frame, but where it's your own trading plan. So Chris, you wrote the first book in Australia about the share market. You're a best-selling author. You've been trading for, I don't even know, maybe
1,000 years.
Multiple decades. You've been a broker, and before that you're an immunologist. So if you had have had your time over again and you could start all over, but knowing what you know now, what would you have done differently?
If I could take mid-20s me and bring them forward to 2021, the central issue... now let me take a backward step. One of the great difficulties when I began trading was simply there was no information.
Yeah.
There was none. There was no educational material, there was no access to information. There's no access to like these complex charts we're looking at. Any charting you wanted to do, you either did by hand or you did in Quattro Pro.
Yeah, the first book that I ordered about the share market was sent to Austria instead of Australia.
It is a little bit harder now, and it is a little bit harder now because we've gone from no information to all the information, and all the information is on blast. It's not, the volume's not adjusted at all. And so part of the problem is cutting through the noise. And if I was to take mid-20s me, bring them forward in time, it would be the same way I used to look for people who knew about my previous profession, people know about my interest in the martial arts. It's find people who've been around for a very, very, very long time and who have a depth of experience across a range of bits and pieces. I'll use an analogy. Let me use an analogy. One of the things when you're involved in martial arts is there's a lot of people who talk about reality-based self-defence. It's called combatives. And it's simply the nitty-gritty of martial arts. It's martial arts pared back. The great problem is that the majority of people who teach it have never, for example, worked security, they've never worked on a door, they've never been in a brawl. And you want, if I was looking, when I used to look for people in that field, it would be people who had worked doors, who had worked security. Looking for people to teach you to trade is the same thing. You need to find people who have a depth of background experience, people who've done all sorts of things. And that is a little bit difficult because, as I say, everything is on blast. It's difficult to discern noise. But the good thing is, the market will be there tomorrow. So if it takes you a month, 2 months, 3 months to find someone, then that's just the way it is. But it's finding people with depth of experience because they're used to the fact that, oh yeah, we had a pandemic last year, market fell. Looks exactly like the GFC, which looks exactly like the .com bust, which I saw. Looks exactly like 87, which I also saw. So you're not surprised. You don't want people who are surprised by things in markets because that's a reflection of a lack of experience.
This will be our 22nd year of running our Repeat for Free mentor program. In the mentor program, we will teach you how to trade every instrument over every time frame, but where it is your own trading plan. We have tiptoed through that minefield. We have seen every market condition and we've come out on top Also, we've helped our traders come out on top. We are so excited about the future for you. The only way to get involved is as soon as we open for bookings, as soon as you can, click that Get Involved Now button. We are so looking forward to seeing what your future will reveal, and we know that you can be an exceptional trader with our help.